Hello and welcome to another update video about Bitcoin. So on the Bitcoin chart, we have seen this successful reaction to the trend line. In the last video, I shared with you that the market, obviously broke out, right? Retested from above. And we were at least watching for a retest here of the trend line. And seems like this retest was successful, but we haven't yet seen a break above, or at least not a sustained break above the third wave high from the 17th of December. Now, quick reminder that this entire move up from the 5th of August low is to be seen as a diagonal pattern. That means the fifth wave up would be an ABC structure. I'm not sure if everybody's aware of that, but obviously we've seen quite a bit of volatility over the coming days, right? Over the previous weekend, yeah. And that volatility on the smaller time frame especially, I mean, it's going in the right direction. We still want the price to go to 130K or so. But that volatility has surprised a lot of people. Well, I warned about volatility due to, obviously, what's going on this week, inauguration and everything, Trump becoming president. But also, it is an ABC structure. So Circle Wave 5 is an ABC. And therefore, we have to be ready for changes in the microstructure. And I will probably make a change to the microstructure of the Bitcoin chart, maybe later today, not yet. Need some more clarity about the micro count. For now, it's going in the right direction. It reacted to our support, absolutely, but please be aware that, wave A of Circle Wave 5, could be an ABC structure itself, and then the C wave could be an ending diagonal, and it's certainly not an impulse, I think, from what we can see right now. But, okay, I shouldn't say certainly, that's not true. I need more data to rule it out. But again, it doesn't change the overall assumption that we should see the price go higher over the coming weeks towards the 130K level. Trump coin, I just want to say, a lot of people see it as a problem. Well, I'm not sure if it's a problem. It certainly has created more volatility. Yeah, but as I said, the structure already told us before it will be a bumpy ride because we're dealing with a diagonal, right? But still, I think it is more like a symptom of the overheated sentiment, or the sentiment we see in the market, right? Crazy things happen towards the end of cycles. Remember that a lot of people find it good news that Trump, remember that bullish markets form tops when there are bullish news. Bullish markets don't top on bearish news. Bearish markets form lows around bearish news. So it's, what many people don't understand necessarily, but yeah, please be aware that we are sort of in the late stages of a cycle. We haven't formed the major top yet, and I still would like to see the market go higher for at least one more high towards 130K, but obviously we'll stay very, very close to it. At this stage, I cannot rule out a test of this support area either, but it's become less likely, obviously, as already mentioned, in the last few days. Now, looking at microstructure, for now, I'm tracking this as an impulsive move up. This is the 15-minute chart, and the current thesis is, as you know, that a fourth wave bottomed on the 13th of January. On the daily time frame, it is this fourth wave. That's the current idea. And there are a couple of ways how this move to the upside could unfold, either as a 1-2-1-2 setup, and then we're now in the third wave. I find that very unlikely with the structure of this move, unless the market goes directly now one more high. If the market breaks higher now directly, then yeah, this is, I think, confirmed. The blue count remains primary for now, right? That was my last message. But the rally here is only in 3 waves. Okay, so it's now a test for the bulls. Whether we can push higher, then we reach probably the next target area, which I communicated yesterday. So what I'd like to see is the market move from our support area. I mentioned yesterday that this here would be not the worst place to enter, but obviously it's up to you, because this was deep in support, right? The only question is always, where do you set your stop? Because there are 2 scenarios we're tracking from a bullish point of view. But anyway, the price reacted where it needed to, okay, to keep the preferred scenario alive. But all I'm saying is, looking at the structure now that happened, I'm kind of thinking, well, it doesn't really look impulsive. I need one more high. Okay, then we can call it the third wave. Okay. Ideally, it would reach 115,166, however. But this pullback comes at a weird spot. But still. So blue count still preferred. But I think there's a high likelihood of the chart to morph maybe towards the yellow count. In this case, you want, if you trade really the short term, I mean, this was a great intraday trade. I mean, you might wanna consider to at least move up the stop to break even or something, because there is a chance that a wider wave 2 unfolds. Now, if a wider wave 2 unfolds due to the high B wave, we might never see the price go below the A wave low. So please consider that. But overall, as I said, the blue count remains preferred as long as we're holding above $99,070. Only a break below it will make it very clear that the yellow scenario is unfolding. This year was a nice and healthy corrective pullback. It was not an impulsive pullback, which is why we are watching for higher prices. But as I said, it might change to a different form of an ABC structure. But there's no need for it at the moment. I'm just saying the likelihood is the count will morph. Don't be surprised, especially here with Trump, throwing out, pushing out family coins. So there's a lot of volatility in the market on the shorter time frame. But again, that can be explained by market structure. I simply haven't labeled it because for now our wave count works. And one of the guidelines I'm following or principles is that we have a wave count so we can use it for trading, right? It's not a wave count to, I don't know, win an academic prize. Of course, we are following the guidelines and rules, but it's not about the search for the perfect count. It's there is not the one count that is correct. It's about having a count that works, right? So it's a very pragmatic approach, a very practical approach, because we have to produce counts that help traders and investors, not counts that are the perfect count, and then you get entangled in academic discussions around. But anyway, I just want to say there's a high likelihood for the count to change, because if this is an A wave up, just to show you, it could easily be A wave, B wave, C wave, in a larger A, and then this is a diagonal, like 1, 2, and then like A, B, C in wave 3, then 4, 5, so that it can change. But for now, I think we need to give the charts a bit of space to breathe because of that. And we shouldn't get too caught up in the microstructures. But the levels are more important, and they are holding. So I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.